The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Hi, everyone. Not Larry Pesavento. Basil Chapman sitting in for Larry Pesavento. Larry's taking a well-earned break, and I'm going to be here. I'll try to be as often as I can. Today, great, worked out. I'm really looking forward to it. Not my area of expertise because I only trade the E-minis. I do not trade all the different currencies and all the oil and all the stuff that Larry trades. So I'm going to talk it purely on a technical basis. I'm looking here at the E-minis, and the E-minis are down 10.50 at 16.83. And what I've drawn for subscribers based on the Chapman Wave methodology was that the 1705 level was a peak D. There was an alternate count and it became a peak D. But most importantly, actually let me move this over there. Most importantly, if you look at the high that was made on the E-mini on the 1st of August at 4 o'clock in the afternoon at 1703.75, and you see that the MACD, the moving average convergence, now Larry doesn't use any of these techniques, but he did go short the other day. He went short the S&P, so congratulations, Larry. Great trade, great position. And as it was rising, the MACD, that's the moving average convergence divergence. If you're not used to my work, I'll sum it up in a short while, but right now I'm just going to explain just a real simple series of vertical lines. That green line said that at this particular point, the MACD, the green line, which is the 9-period moving average differential between the 12 and 26 exponential moving averages, and it puts the greatest weight on the last close. That's why I like this one so much, the exponential moving average. And that red line is the slow moving average. And you can see that the green, that's called the histogram, those vertical lines there, that's not volume, the volume's the gray lines. That shows you, if you're looking at Tiger TV, that shows you, let me just have a quick look here for 1 second. Where did it go? There it is. Okay. And what it shows you with the green line is that the stochastic was up in the, I think it was in the 90% area. It was up at the 93%, 90 to 93% area. Very strong. Then the price went sideways without breaking the high, but making a low around about 60.95.75. And then, and this to me is always fascinating, there was one little pop to the upside to make it a new higher high. I call that leg D at 1705, and look how poor. This is deflecting lower. The fast moving average is below the slow moving average, and it's deflecting lower. Look where the stochastic is down here. Look at that. You can sort of see it faintly in the background. That's the relative strength. Now, the on-balance volume concurred with that and said, we did make a high. And that was so important. That's the reason why you've got to use as many technical tools as possible to have a consistency in your analysis. That's my thinking anyway, because that said to me that it could be a rectangle formation with the on-balance volume holding quite nicely. And it also said that as long as the price was above that black line, the 9-period exponential moving average, you were holding in a rectangle formation which could last quite a while. And it did last a while until finally it broke down and it went trough A on the downside. On the upside, the capital letters A, B, C, D. It goes even higher. And on the downside, it goes lowercase a, b, c, d, e. And what I showed subscribers this morning was that there was a trend line that gave a price projection towards the 1680.25 level. Well, what was the low today? 1680.50. So far, the stochastic's gone all the way down to, I think it's about 5%. Is now trading at 10.94%. Not very strong. The MACD is trying to turn. The histogram is making slightly higher highs. It says, yeah, there's a chance now that there could be a bounce. 1683, the 9-period moving average of 1686 is really strong. That's the way I would look at it. All I can say is if it breaks to a lower low, 1677.25 would be the left side low bar that I'd be looking for, and that was the low of the 30th of July. So that's the 120-minute chart. So I like to do all these different time frames. Look, the daily has given me a peak D top. There's an alternate wave count. I will take a moment here to talk about this because I know there are a lot of you that actually let me just see if that's Freeman calling again. OCR. Is that Freeman on the line? Is that new?
Yes.
Hi, Freeman,
yes,
you there? Hi,
yes,
good. Okay,
am.
you did call back. Great. Okay, folks, I'll be right back to this. I do want to get to Freeman. He was on my show, which is the Tiger Technicians Hour, from 11 to 12 every day, just before Larry's show. And I could not get to Freeman in time. So, Freeman, you wanted to look at OCR, correct?
Yes, yes.
So now OCR is Omnicare Inc. The monthly chart is just stupendous. I've got this as a leg E/C, and I have no reason why I shouldn't even think it's C because the MACD is at 95%. The MACD is very strong. The stochastic's at 95%, and in the weekly chart, it's really strong with the leg E, definitely leg E, and the, let me just put the down arrow and the up arrow so it's very clear. There it is. And the MACD is, in fact, still expanding, and the stochastic is at 95%. The only fly in the ointment is that the on-balance volume and the relative strength say we are really close to at least bumping to some kind of resistance. So now we have to go to the daily chart. I love these three time frame views, and that says it's made an all-time high today of 55.85. I'm looking for round numbers, no round numbers. Are there any earnings coming out? Do you know?
I think earnings already came out, but I was looking for a pullback to get in, but I never got a pullback.
Yeah, you know, there are a number of these stocks that have just given no entry at all on the way up. There are two ways of trading those. The one is to just blindly say, instead of the position I was going to put on, I'm going to make it smaller because of that risk that I just lost. And I'm just diving in because if this was Apple or Priceline or LinkedIn or any one of those that had this kind of pattern, you could look back every single month and say, oh my goodness, I don't even remember where I was trying to get in because it never ever pulled back. I've got no peaks to identify. This has not made a lower high bar. Oh, wait a minute, I missed something. Oh, I'm so pleased I saw that. This is leg D in the monthly. Ha-ha. That makes a difference. So that's peak C. Very good. I thought I missed it, and then I forgot to go back to check. There it is. Leg D in the monthly. So it says in the Chapman wave methodology, the wave goes to A, then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. So that's the monthly. The weekly is in a very strong leg E. No sign yet of a turnaround, so it has to come from the daily. Here's my recommendation. Because this is the fourth, I just wonder, for people who are not used to my work, or used to Larry's, I hope you're still tuned in, folks. The most identifiable low bar in this case was the low in Omnicare. OCR is a symbol, trading at 55.37, up $1.08. Back at 36.71 with a high of 37 and an open of 37. Beautiful. Oh, what clues those round numbers are. So I'm going to put down 37 round number op and plus close. Great. That's in the low. Oh, was it the close as well? Well, I'll fix it up. So that was a very good indicator. Then it goes peak A, B, C, D. At D, it gets its biggest pullback with the MACD and stochastic. Then it goes A, B, C, D. Just nominally, that 2 days later, it goes to an E. And then it pulls back. And it pulls back briefly for one bar. And it starts a brand new A, B, C, D. Pulls back for 1, 2, 3, 4. 5 bars, starts brand new A, B, C, D, and now we're in E. And the history of this is that at every D or every E, there has been some kind of a pullback. So this is the one time I'm going to say to you, I don't know if I would close my eyes and buy this yet, even though it's up $1.10 at 55.39 in a day when the general market is acting very poorly. Because, yes, it could go higher, but, it might only go to 57 and then turn down. And your risk is that at any day now, it could just suddenly have the quick down move that it has whenever it gets to a D or an E. So that so that your risk is a $2 upside. Let's call it $1.70 to $2.20 upside. But the pullback could be real quick as it slides into 53.59, and there's your 2 points. So to gain 2 points when you've got a 2-point risk, I don't see that right now. It's one of those stocks where you just, someone emailed me today, one of my subscribers, and said, GT, Goodyear Tire, it was at an all-time high, and I'm saying to myself, we owned Goodyear Tire at about $12. I love the stock. It just never. Yes, it did give entries. Not if you're looking at the weekly chart. But it did give entries, but each time it made a stair-step move to the upside, and sometimes you miss it and you just turn around and you say, there were times that I should just grab this, and I didn't. But right now, market-wise and price-wise, GT has made a peak F-top. In the weekly chart, its E could be a peak E, and it's hit the 200-period moving average resistance. So I have to say to myself, Goodyear Tire is a stock that it's in the area that I love, which is the automobiles. But the automobiles are now starting to show signs of wear and tear. We were long Ford. Now we're not long Ford anymore. We took profits this morning. But I think I feel the same thing about your OCR. I think it's one of those that right now has a greater chance of risk than reward. And I could be wrong. And if I'm wrong, I still see only about 2 points to the upside before it starts to come down. I'm just going to have to say, why don't you wait? If it pulls back between 52.50 and 51.50, that's the area that's going to give us the most information, because if it's still holding very well then, and maybe the market's finished correcting or whatever it is, I would say, you know what, now's the time with a better risk reward to get in, or it might be signaling me to say, hey, I wouldn't short the stock, but I could see another 3 points to the downside. Do you know what I'm saying? The stock this strong, never touching the 9-period moving average since it broke out above it in the weekly chart back in March of 2013, back in the that's months ago, and then gone straight up. I think at some point in the next month and a half to 2 months, it will test 50.78, the 9-period moving average. But so far, it's just been a stupendous stock. It's one of those risk-reward things, and I would be remiss if I didn't say to you that I see it. Well, it's just the fact that it's holding with relative strength right now makes it very attractive. I know the way you like to position yourself, and you're not afraid to take profits. You're also not afraid to get out when you're wrong. But, Freeman, I'm going to have to say that, for my opinion, I think the risk right now is much greater than the reward. I could be wrong, but that's my thinking. Hope that helps you.
It did, Basil. Thanks a lot. I appreciate that.
Thank you, Freeman. Sorry for taking so long to say that. Folks, this is Larry Pesavento's show. I'll be back, and we'll be looking at a whole bunch of things as well as the Aussie dollar. I'll be right back. The Dow is down 70. Be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman sitting in for Larry Pesavento. The show's called Trade What You See, and what I'm looking at here is question in the den about Five, F-I-V-E, and this is a company that has just goods, just all sorts of things for sale between $1 and $5. So anything under $5, that's what they have. And I'm wondering why it's not doing better than it's doing. It could be many things, but it's just trading in this range between touching the 200-period moving average and then moving up. It's got a channel. I could type. I'll put the channel in right there. Look, straight line. Another channel right there. I'm going to actually do this a little differently. The golden line is, orangey line is the 200-period moving average. The red line is this parallel inside track. It's a channel line, but I also call it the inside track because what it says is every time it gets into this area, that's where you want to buy it. Every time it gets into this area right here is where you want to sell it. Let me just put this in right there. Now it's going to be right here. Then we're going to do another one above in green because if it breaks out, that's really positive. Green for go. There it is. So what we're looking at is a trading range. All I'm going to say is, I don't remember who asked me in the den about this. It was, I asked for it. Five. So Five I'm looking at, and I'm saying this is the area I'd start looking at it. Right in the 200-period moving average at 36.53. It breaks to 36.20. I'm out of that. So very tight stuff. That's the area I'd be looking for a bounce between 37, another little bit down, 37, make it 3709, it's a 3758 FIVE, 5 below ink, and that's when I'd be looking at for it as a trade. What has it done? Keeps going to a peak. How many times, folks, in the last, whatever it is, that I've been showing you this, have we seen 4 peaks, at least 4 peaks, maybe 5, the 4 peaks, goes to a D or an E, and bam, it comes down. There it is again, bam. Comes down. So that's the technique that I use, Chapman wave methodology. So the daily says, hey, just be a bit careful. Another point down, you might want to nibble. The weekly says, nibble? Are you nuts? The monthly says, it's made a peak B, and as long as it holds in a trading range and doesn't really break a monthly chart, of course, there's a much bigger parameter, 35.80 to 34.62. That has to hold. A break under that and it touches 33.62, the 200-period moving average. So far, if you had asked me what would I do, I'd say, you know what? I wouldn't short it. I wouldn't buy it. I just stay away from it. It's in a trading range for now. So I hope that helps you. Now, the next thing is, I had a question. Gold in the Den asked about FCX. FCX, Freeport McMoran, is acting very well. It's trying for a leg leg C in the weekly, in the daily, above the 23rd of July's high of 30.14. Its FCX is trading at 29.66. Nice chart pattern in the daily. Weekly chart is just saying, I'm doing the absolute best I can. I have to break and hold for at least 2 out of 3 bars above 29.42, the high of the week of the 2nd of August, to be able to show enough strength to be able to get into that ugly bar of the 24th of May. 32.08 was the high, 29.14 was the low. That's going to be the one that you want to get right into. You want to go above the candle of the 31st, 30.86, and that'll say, great. Now the monthly can improve after being just horrible. Horrible. Made a peak D top. Again, there's another D top. So the consistency is quite amazing in this particular technique. So that's what I'm looking at. Yes. So in other words, if you're in it, hold it. You don't want, if it closes under 28.77, I'm out. That's the way I would look at it. But holding so far, very nice. Next question. Let me see. I wrote them down. The Qs, we discussed the Qs. I tell you what I want you to do. I want you to go back to the AUD. We had a caller, just the AUD USD. And we looked at the currency pairs. This was a rich in Tampa. And what I'd said is, I'd nibble right here because I think that it's attempting for the first time to get back into the arch formation, which is really important. And the low of the 12th of July in the AUD USD currency pair is at 8.9974. And right now it's at 9, so it's already above that. That's really important. So what I would be looking at is saying, okay, on Friday, if the AUD USD currency pair, which is trading at 0.9092, is able to get to 0.90762 or higher, finally you've got a chance to retest 0.9197, the 200-period exponential moving average. I have to tell you, the monthly chart is ugly. Monthly chart to me has a target of 83 over the coming months. But so far, that's what I'm looking at. I'll be back. And Basil Chapman sitting for Larry Pizzavento. Trade what you see.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Basil Chapman sitting for Larry Pesavento. Trade what you see. My pleasure to be here, and I just want to show you something very interesting. The Canadian dollar, USD, CAD, Canadian dollar currency pair. I was asking the den about it. The weekly chart, the monthly chart is walking the 9-period moving average with the technicals improving. So far, it's at 1.04, but 1.0255 is really key. So if it goes to 1.024, it's starting to break that trend of holding the 9-period moving average. The weekly chart, I'm calling it right now peak F top, and it is still holding the 9-period moving average, but here it's a little tighter. If it at 1.0413, what you need really is to move quickly above that and close Friday above 1.445, somewhere around there, or even higher. But if it closes under, so far the low of the week is 1.0347. If it closes under that, be careful, because it could retest in that H pattern, the 1.02 200-period exponential moving average. So that, I just want to say now, on the daily basis, that's the same as what we were looking at a moment ago, is the Australian and dollar currency pair, and they seem to me to be having a little bit of a counter trend move. I'd only treat it as a counter trend move because it is, this one's a little stronger. It's not coming off the bottom, it's coming off a higher low, and that's important. But most importantly about this is that it's holding the 9-period moving average. It's starting to make higher highs and higher lows. So on a short-term basis, that's what you want for an uptrend: higher highs, higher lows. If it goes under 1.034, I'd say just 1.033. I'd say just be real careful. Stochastic only at 66. It needs to be over 80. MACD is turning around. So yeah, just on a short term, the bias is actually looking quite good to the upside. So that's that. Now, I was asked about FSLR. FSLR is a solar company. What's it called? First Solar Inc. This is very interesting. It's made a peak F top at 59 round number high. I love the round numbers. Folks, learn how to appreciate all these different tools. The round number high with that beautiful doji candle. It's called a long-wicked candle in my work. It says it could retest the middle of that bar, whether it goes up or down, and that middle is the open of 55.51. What does it do? It makes a high peak F in the Chapman wave. That's where you got to be really careful. That's what we've got in the Dow and the S&P right now, peak Fs. So it does that. It pulls back under the 9 EMA, but then it goes back where? To retest the 55 level. It goes to 56.75 in the 30th, and then starts a pullback, tests it again in a cup, double cup formation, U formation. Then it pulls back to 40.46, goes to a peak D, and what does it do? It plunges today to the target, the left side, right side price time match of 40.46. Today's low so far, a day early actually to the chart pattern unfolding in the Chapman wave methodology, is today's low is 39.84. It went underneath it. The 200-period exponential moving average at about 39.19. That's the thing to watch closely. The weekly chart says alternate count. I put this in some time ago. I said there's a real good chance we've got an alternate count. That makes it a peak F top in the weekly as well at 59 round number. Man, I tell you, get those round numbers down. How round numbers work when you're talking about electronic trading. It used to be when there were people that were, you call them up and you said sell, and you wanted to make it as short as possible. You say sell at 59, and that's it. So now it's made the H pattern. You know, it's a formidable pattern in the Chapman wave methodology. It's a pattern I used to call the dreaded H. Now I just call it the H pattern because it's in chapter 17, and this is the pattern here, right there. This is the H pattern. It goes down. It can keep going down until it forms a much bigger arch, and that arch will become an M pattern. So what we're looking at here is that H pattern is the first of the ones on the downside, highly vulnerable. These guys get a lot of government money. Wow, what a waste. And then in the weekly, in the monthly chart, it's in leg F. So that's what I'm looking at there. And the other one that I was asked about was Ralph Lauren, or L. Ralph Lauren is a peak D. Oh, look at this price time match. What a beautiful thing. You know, this was on my list of short, but we've got others that are working really well, so I don't, you know, it doesn't bother me. So it's down 12 at 177. It made an unusual peak G top on the 22nd of May at 192.03. The day before, it had a high of 190 round number. I'll tell you something. Round number high, but that was the day before, so I always put it in small print. It's called a silent because you wouldn't see it if you didn't look for it. And it wasn't at the high, so it didn't show up. And then the high itself was 192.03. 192.03. That makes that whole 190 area sacrosanct. If you break above it on any retracement and rally, that says something else. So where does it go to? It goes to 189.80 as the high. 198.80 yesterday. 189.80, and today the low is 175.05 at peak D in a left side right side price time match. It never quite got there. Today was the day it was supposed to get there. Yesterday it almost got there, missed by a couple of points. Plunges today. So that is Ralph Lauren. Weekly chart has made a peak D. This is a failure pattern. Could in fact turn into an H pattern. I'm a little worried about these retailers. Let me tell you, I don't think this is good news. At some point, the market is holding quite well. I wouldn't be surprised if we have a little bit of a bounce. Ralph Lauren had a possible peak F top in the monthly chart. We'll be watching this real closely. A close below 172 in the monthly says that it is going to go to the 169. So let's watch Ralph Lauren. Would I short it at this particular point? No, I think you can wait for a bounce if there is one. I'd rather short it between 180 and 183 than to do anything right now. Questions in the den. I think I've covered EWU, UK, EWU. I think I missed one. Question EWU. Okay, let me see. There was something else here. Somebody asked about. Did I get to 5? Yes, I got to 5. FIVE. Just checking any of the email IMs. Yeah, okay. So what we're looking at is EWU. Now, this is so interesting. Look. This is the ETF iShares of the United Kingdom Fund. Now, it doesn't really represent well the chart of the FTSE 30. Although I haven't seen, oh wait, I've got it right here. Give me a second. FTSE 30. Is it on this machine? Oh, it's on my other machine. All right, I don't have it. I thought I had it. I don't have it. So basically what we're looking at is that the EWU is making this double top formation in the daily chart. And what does that mean? It means that you've gone from a peak A, the low bar of the 20 of June the 24th, is taking you to peak A, peak B. It's all we do. This is how simple the technique is. C, and then what happened? I go C1 and C2, a technique that I developed over the last few years, where what we look for is a failure pattern that just misses making it a leg D. 19.05 was the high of the 24th of July. 19.04. It missed by 2 cents, making it. But the MACD was putting back. The stochastic was putting back. So what I've learned to do is to treat it as if it was a down arrow, a peak D. And then I put a plus sign. I can't put a down arrow because that was the high. This is not the high. And that wasn't D. So I put a plus sign and I changed the color, red. That tells me, watch out, that's exactly like a peak D. You could still make your leg D, but treat it as if you're going to pull back. So all I'm looking at here is that it's holding quite well. If the EWU at any point over the next week goes under 1861, it sounds like it's far, not far away, but in something that is so low priced, it could take a little while to do. If it takes that out, that's very negative. That says on the weekly chart, be careful because the next level of support besides 1832 would be around about 17.90, and it is leg D, possibly peak. It is peak D in the monthly, the second peak D in almost a cup formation or a V-shaped formation. Got to be careful. Under 1831, it's going to be longer and deeper, so we're going to be watching 1831 very closely. So I think we did that. So now there was, yeah, we've got callers. Good. We've got Greg in Portland. Hi, Greg. How are you?
I'm doing fine, Basil. How are you doing?
Very well, thank you. You'd like to look at?
Let's look at the TDT.
That is the 200% short, ultra short Lehman 20-year Treasury fund. I've got a peak D. There was a C1, C2, just like I was pointing out in the EWU, and now it's gone a little higher to 78.62 in an up channel resistance, got repelled at the inside track, what I call the Chapman wave inside track repellent zone. And yeah, Reed, I didn't finish the E's. I'll be back there very soon. And then I got a peak D. I haven't really got a confirmation yet of a down arrow. So let's just say, are you looking to do what?
Well, I took a position at 67.39, and I sold half of it when it pulled back off of. When it pulled back off of
C1, C2.
Yeah, peak D. When it started to pull back from peak D, I took half off. So I'm still holding
fabulous.
The original half.
Okay. This is what I'm going to recommend. I'm going to recommend two things. One is that the TLT, and I mentioned in my opening call this morning, is this the time to be getting to the TLT? Because it's made the arch formation, the H formation, made a 105 round number low, and now it's trying to go for leg B, but a very tiny leg B so far in the daily chart. Coming off the weekly chart, and I need to go just for a second to the yields that I wanted to show, my triple yield chart, the black background chart. The white is 30-year, the yellow is 5-year, and the cyan color is 5-year. And I'm almost, I can't say I'm positive, but I would put a 75% chance that we're going to make a peak C this week without going above 37.74 in the yield. Well, that says that there's a good chance that the TLT, in fact, could rally here. How much is really dependent on so many things, because the weekly chart is so flat in the stochastic that, boy, the price is actually going to have to drag the relative strength up, and the monthly is horrible. I would treat the TBT you've taken half off. May I make a recommendation? If this is a long-term position and you've got it much lower, I probably would say, it's worth the risk to hold it a little bit. But actually, my thinking here is the TBT could pull back to test the 74.5 to 73.90 area, that uptrend line that I've drawn in the channel. Yep. But there's a real good chance, the way I'm looking at it now, if I'm correct about this market having a pullback more of 5%, but it could be more. It could actually start expanding. I don't know yet. I only know a little bit more at the end of the day today, and certainly by Friday. I would suggest that on the TBT trade, the position you have, you consider another portion that you might want to take off only if it goes under 73.60. I don't know if you want to give up almost 3 points, but if it goes under 73.60, I'd be out of that. But the trouble is 73.85 is the 9-period exponential moving average. Let me explain what I'm thinking. Let me talk it out rather, and you can make some decisions. I think we're going to be pulling back in the TBT, and I think we're going to rally in the TLT. Not very much, but enough. I also think that the peak C in the weekly chart of the TBT is telling me that there should be a pullback. I suspect it's going to hold above 73.85, the 9-period moving average, and then it's going to go to a D. And at that point, we're going to get an even deeper, there's a chance of a deeper correction in the general market. I don't know. This is just my thinking out loud here. But you've got such a great profit, and you've timed it so perfectly at peak D to get out of some of your position. I don't really want to mess with your thinking. I think you're the one that's in command of your trade. You've done so well. I'm only going to make the suggestion that if it pulls back a little bit more, I'm not sure whether that's going to be a new buy at 74.30 to 74, or whether you've got to be real careful because it's going to take out the doji low of 72.63. I just don't know, because a lot depends on the market. But I can tell you this, if the Dow goes underneath 17,320, the TLT should rally, and it should rally strongly. If it doesn't, there's something different to this whole scenario that we've not seen before. That's my thinking. So you see, I'm trying on one hand to say keep your core position in the TBT, because I think we're going to go to at least a leg D in the yield. But at the same time, I'm saying to you, I don't want you to give up another 2-3 points. That's a lot of points. You know what I'm saying? Yeah. So maybe another quarter is what you put on at 75.30 as a stop, so that's the position that you can think about putting it on back at 74. That's a point that you've saved, a point that you gain. That's the way I would think it. Keep your core position, put a stop about a point lower on the TBT on 1/4 of your position, or at least a little bit more of your position that you want to take off. Hope that helps you.
It does. Thank you, Basil.
Thank you, Greg. We'll be back with Alex and John straight after these messages.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi folks, Basil Chapman. Just really want to finish this quickly. The E-minis, that was what I call a phantom peak right there at on the 27th and the 28th of June at the 159.75, 194.25. 1614.25, 1614.50 area, and that makes us an alternate count D. And if the S&P E-minis at any point this week crack under the 16, it's at 1686. If it goes under 1679, 1677, that would confirm for me that this is a peak D and that we should be going down and retesting the 1670s quite quickly. So I just wanted to finish that. Read in the Den reminded me that I hadn't finished it. Let's go to Alex in New York. Hi, Alex. How are you?
Okay, Basil. I sold some IBB, I guess it was on Monday, because of you, at an even number, at 200.
Right.
And the last time I bought some IBB, I'm pretty sure the date was June 24th, when there was a dip in the market. I think the S&P was off maybe 6% from the high.
Right.
Why? And by the way, Celgene is positive today. I heard you mention it yesterday.
Yes.
Why do you think this isn't just another buy the dip type, what's happening in the market in the last few days?
Because of the way that the stochastic and MACD are acting in the weekly charts, Celgene made a peak F-top with a silent doji the day before at 149.92. Yes, it's up today, but it's down from the 149.92 high. It went all the way down to 139. 139 today. It's 10 points. Doesn't sound like much, but 8% in these stocks. You haven't had an 8% decline in any of these stocks for quite a while. I'll tell you why I'm looking at this. When I go through every single one of them, and I don't know if I'll have time. I know John's waiting online. He wants to look at TZA, but let me just real quickly do this. Look, BIIB. I think I did this already today. It's already made a top, and it's pulling back. If I go through all of them, I went through about 30 of them over the last few days, but over last night, look at Regeneron. Made a peak D-top at 282, and it's already down at the 249 area. It's a C1, C2 weekly top. All I can say is that everything I'm looking at says that the upside, and you've got to expect that the most favorite of the sectors will see buying every time there's a dip. I suspect this time what we're going to look at is lower highs and lower lows. And all I can say is the IBB, I'm absolutely wrong. It's at 196.36. If it goes 1 penny above the 201.47 high, even though it could be making a double top, I have to say, maybe my thinking is wrong. My suspicion is that it could bounce, IBB could bounce to maybe 198 or so, but it should be making lower highs and lower lows over the coming couple of weeks. Based on the stochastic connected. I'm sorry, what?
Where it dipped to on June 24th?
On June 24th, way down, you're talking about the 164 area? Oh,
yeah.
Yeah, this is going to be very interesting because it's 189.91 is the 9-period moving average support in the weekly chart. If it breaks that, 186 is next. So I've got a lot of support levels to look at, but the gap that I'd be looking at is underneath 186 to 184.70. That's the gap that is really the target. I'm going one step at a time in the strongest sector that we've seen in years. So I don't want to overdo this. We've got our positions. I'm just going to go step by step, but that's my thinking, that we're going to make lower highs.
The last time that I added to the position was on that dip. Well,
I'm going to recommend that. I recommend keep that in mind. That's what you're thinking. But I might find that it doesn't go that far. That in fact it's a very strong dip, but it's not strong enough, and that it starts to hold support at 185 to 183. So let's go one step at a time and see what's happening. And I'm sorry, John, I'm just going to do this. If you are along the TZA, I'd stay long. This is going to be interesting. If the IWM breaks 103, it goes even lower. So I hope that helps you, John. Sorry that I couldn't get you. I'll be back tomorrow. Basil Chapman, Tiger Technicians Hour, tomorrow at 11 o'clock. Thanks for me sitting in for Larry.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.